Hey, good morning. Welcome to the Mortgage Rate Forecast with Scott Criss, your mortgage rates and news. It is December 15th, and guess what we're going to do? We're going to start with the charts. So here's what we got. First off, you should probably know I'm changing my tracking from a 3% coupon up to a 3.5 coupon. So if you see your numbers change up here from the last recording, that is why the 3.5 coupon's obviously going to trade a little bit higher. So here's where we're at. We're at 101.19 this morning. Support's coming in below us down here at about a 101 even and $100.60. We are seeing resistance above us at about 102.10 and 102.80. And reports were pretty light today, except for the Philly Fed and the Empire Manufacturing. The CPI jobless claims really didn't have a lot of impact on bonds, but the Philly Fed and Empire actually came in way better than expected. And so it's almost surprising that we haven't seen bonds maybe sell off a little bit more than what they already have. So you're probably looking at this chart and saying, hey, I know this was the election over here. This was the Fed coming out and talking a little bit here. And what the heck is this? Well, that was the Fed coming out yesterday. Now, we knew the Fed was going to increase the short-term rate. That wasn't a surprise for probably me, you, or any other analyst out there. But the Federal Reserve really came out and they're very hawkish yesterday, which is why we saw the major sell-off yesterday afternoon. So really nothing was too big of a surprise except for how confident they were with the economy. One of the things they mentioned is instead of raising the short-term rate maybe 2 times in 2017, they said they were probably going to raise it 3 times. So that shows a lot of confidence in our economy, and therefore investors are moving their money more towards stocks. You probably saw that Dow. That's good for your 401k. Not so much for mortgages, but good for stocks. But the investors are putting more of their money into more aggressive positions other than bonds. Bonds have also fallen in Europe. So Bank of England, Germany, they're also seeing much higher yields right now. So kind of quantify where we're at. Freddie Mac reported for November that the average consumer received a 3.77 rate and paid a little over half a point for that. That was with trading right here. That puts average trading at about $103.40. That means we're trading about $2.21 worse. So what does this mean? Well, if the average consumer was paying half of a point for that rate, now the average consumer is going to pay almost 3 points for that same rate. So we can kind of see the sell-off has been pretty significant from election to the Fed. So still hanging out in that downward trading channel, guys. So let's get to our forecast. Here's where we're at. Analysts' outlook were pretty consistent on the short term. They were a little bit bearish. I mean, we got hit on the jaw pretty hard yesterday. So, you know, everybody's saying be very, very careful. Where they were inconsistent is the analysts were actually both bullish and bearish on the long term. So let me go back to this previous slide. One analyst says, hey, we're going to continue to fall. Another analyst says, hey, you know what? We're going to probably be trading between about 102 and 103 up here shortly. So we just got to be careful. One of the analysts is known to be a little bit pessimistic. The other one's known to be a little optimistic. So here's going to be my call. I think we're going to see a trading range up through next Thursday between about 102 and $100.50. From where we're at, that's about a 3/4 point difference. Okay, either better to the worst. So I'm going to give you the same advice I gave you last week. And if you took my advice last week, you were probably a big winner. If you didn't, I'm really sorry. But here's where we're at. If you like it, lock it. We're right in the middle of the trading range, and there's some pretty big swings coming our way. So we got to be super careful. So if you like your rate, lock it in. That's my best advice I can give you right now. That's it for now. I'm going to be recording next Thursday prior to Christmas. But don't forget, leave your comments down below. We'd all love to hear what you think. And everything likes to be liked. Hit that like button. It doesn't hurt anything. Hit that like button on the video before you go. And if your first time on the channel, you haven't been on here before, and you're thinking about getting a mortgage, whether it be refinancing or buying a house, and you want to kind of keep a pulse on interest rates, what they're doing, at the top left, you're going to see a little link. You can click that link and subscribe to the channel. When we do releases, you'll just get a little notification on your phone that a new video was released. If none of this made sense to you, it's okay. At the top right, click that link. That will take you to Mortgage Bonds 101 and explain to you how bond trading impacts you as a consumer getting a mortgage. Really cool stuff. Anyway, that's it for now. We'll talk to you next week. Bye-bye.